Hello, chart watchers, and welcome to this Friday, November 16th Market Watchers live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, it's been kind of a strange day. The market all over the place. The Dow Jones Industrial Average currently up 15 points. The S&P 500 down 5. The NASDAQ down 60. And the Russell 2000 down 12. So we are seeing, again, underperformance in the more aggressive NASDAQ and Russell 2000 indices. The 10-year Treasury yield down 4 basis points, 3.08% right now. We'll talk about that in a minute. Volatility was on the rise earlier. It is now down at a low that we haven't seen since back on Tuesday, down about 19.65 right now. Utilities, defensive group leading the action today. Never a good sign on a day where you're looking for a movement to the upside. Energy also bouncing off of those crazy move lower that we've seen or that we've kind of witnessed here over the past month or so. Real estate bouncing as well. That's another defensive group. And then to the downside, not exactly what you want to see here. You got communication services dipping by roughly 1% or so. The big news of the morning from an earnings perspective is NVIDIA. NVIDIA down $37 to $165 after not only missing on top and bottom lines, but pretty significant warning going forward. So we'll talk about that in a bit. But NVIDIA, wow, big drop. Recently, I think beginning of October, all-time high. And the drop that we have seen since then is probably down, 40%, something like that, maybe 35, 40% since its all-time high. It's amazing, Erin, when you look at some of these stocks, how much they have dropped. Some of these high growth stocks, especially in the semiconductor area.
Oh, I know. It's, the deterioration of that whole sector is really something that bothers me, as far as a possible bear market, on the horizon. We've got to start seeing leadership from these guys, and all they're doing is really tripping up and falling.
Yeah, that I would certainly say that was a nice little tumble that NVIDIA had. But, as I'll show on my relative strength charts in just a couple minutes ago, NVIDIA, this shouldn't be a shocker when you see a report come out as bad as NVIDIA's, when you look and see how much technical damage has been done over the course of the last 6 weeks on the chart. I mean, you can see NVIDIA was up 290, close to 300, and in 6 weeks had dropped down below 200, really down below 180. That was about in 4 weeks.
Ouch.
So talk about a company dropping, that would be what, 40% in
That's a lot.
4 weeks?
Yeah.
Yeah, we're not talking about some small company that,
yeah, it's not just some small cap, No offense, small caps out there.
No offense to any small cap out there, but I mean, you could see this maybe a one product biotech company comes out with bad news dropping like that. We're talking about NVIDIA's got, a lot of revenues. Seem to be one of the high flyers beginning of October, and all of a sudden getting slashed. But anyway, we'll talk about that in a bit. Yep. Let's what do we got going today?
All right, let's get this going. Upcoming schedule we have next week. It is going to be a short week, but I will be doing a workshop on Tuesday. Index analysis versus indicator analysis. It should be interesting. You'll want to tune in. Greg Schnell will join us on Wednesday. And then, like I said, Thursday and Friday, there will be no market watchers, although I believe the market is open for half a day on Friday, but we're not going to be here for that. So today, however, we're going to start off with what's hot, what's not. And we're going to follow that up, of course, with the 10 and 10 to 1. Our first symbol is going to be Funko, FNKO, if you want to go take a peek. And I will finish up with the sentiment update. So stick around for that. All right, Tom, let's get it going. Technical news and headlines.
All right. Well, first we've got economic reports. The combination of the industrial production capacity utilization. You can see the numbers there on your screen. We had a slight miss in the industrial production, rising 0.1% instead of 0.2, but capacity utilization rose from more than expected anyway, from 78.2%, which was expected. It actually came in 78.4%. So we did have pretty good news there. As we take a look at the reaction in the bond market, not very good. Money is rotating into defense. We got money rotating into treasuries. Talked about the top of the show. Utilities and real estate both doing well. And here you can see that the 10-year Treasury yield falling, meaning that money is rotating into Treasuries as well. So it's not exactly what you want to see with the market trying to extend yesterday's rally. So I'd like to see this change and this rotation change this afternoon if the market is able to rally. And we'll talk about some of those charts and what to look for in just a couple of minutes. But at least for now, let's watch this 307.5 area. That's where we did manage to reverse at the end of October. If that fails, I think we could be going down looking at this breakout that we saw around 3.01%. I think that'd be fairly significant level to watch in the intermediate term. Okay, earnings reports. Wow. NVIDIA, that might not look that big to you right there, 184 versus 192, but we're going to talk some more about what they said going forward. It was not pretty. Applied Materials just matched expectations, top and bottom line. Again, that doesn't look that bad on the surface, but they lowered their guidance going forward. So these companies, both these companies, the charts look horrible. And so when I see that, that's telling me that they are communicating with the market, and we are seeing a lot of analysts meeting with these companies, knowing that they're not doing very well. They're going back to their offices. They're selling their clients, for their clients. That's what creates all of this selling before the reports come out. And then we get the news. A lot of times it's a sell on the news or sell on the rumor, buy on the news type of thing. So I want to see how these stocks finish today. If they finish weak and near their lows, then I think the selling is not over. If we reverse, have some nice hollow candles, then perhaps a lot of this weakness is built in and we'll be okay going forward. But that NVIDIA report was particularly weak. Anyhow, you can see the other reports on there. We'll take a look at those in just a moment. In fact, let's go ahead and just jump right in and take a look at NVIDIA. Oh, wow. I don't even want to talk about this one. This is almost on the level of Facebook, except the difference is that you can see all the selling in October and early November. So I don't think this one was nearly the surprise that Facebook's warning back in July was. But still, as I mentioned earlier, we were over 290 at the beginning of October. We're now down at 165. That is a major move down. It took months to get up to that level, and it's taken 6 weeks to reverse all of the gains of 2018 and then some. But if you take a look at the semiconductors here, semiconductors, obviously the group has been weak as a whole, but look at the relative performance of NVIDIA prior to the earnings results came out last night. This is not pretty. I mean, we went from one of the leaders beginning of October to a 2018 relative low just prior to the earnings coming out. So this, again, the earnings report shouldn't shock anyone. I was definitely not expecting a good report out of NVIDIA, but I wasn't expecting the numbers that we got. So let's talk about these numbers for a second. All right, so top line, NVIDIA, $3.18 billion versus $3.24 billion. Slight miss. Earnings, bottom line, as I showed you, $1.84, $1.92, a little bit of a miss. But they lowered their Q4 revenue and earnings per share guidance. Here's their earnings per share. The Wall Street was expecting $2.01. They lowered it to a range of $1.32 to $1.49. I mean, not even close. Revenues, Wall Street had $3.40 billion. They came in 2.65 to 2.75. So if you're looking at this chart and wondering why it's down 18%, I think that probably explains it. I mean, these numbers, not only did they miss in the current quarter, but that warning going forward was pretty substantial. All right, Applied Materials, another one that's this goes back even further, all the way back to March. You can see this has just not been a pretty picture here for Applied Materials. They actually came in, matched expectations on the top line, $4.01 billion, matched expectations on the bottom line at 97 cents, but they lowered their Q1 revenue and earnings per share guidance. Now, this is what I was talking about in terms of a red hollow candle. There's a lot of bad news built in Applied Materials already. The company was trading over $60 a share in March. Just recently went down near $30. We're talking about a 50% reduction in this company's value in 7 months. So in addition to semiconductors being weak, you can see that Applied Materials has been one of the weakest stocks within this group. A lot of bad news already priced in. So the fact that we gapped down, we didn't even go back to that prior October low, and we're rebounding, tells me, at least for now, I'm kind of feeling like Applied Materials, the bad news is built in. I'm not so sure if everybody built in all the bad news that we saw in NVIDIA. But anyway, these two companies, not good reports, but at least Applied Materials is rebounding off of its gap down. Nordstrom's inline guidance, I think that probably worried folks more than anything because they beat on the top line, beat on the bottom line, but the stock inline guidance wasn't good enough apparently. You can see the volume picking up. It has gone down and tested some key support just below $50. We got down as low as $49.83. So if you're in held through earnings at this point, I'd really like to see that $49.50 area hold on the stock. Williams-Sonoma. It's amazing to me that these stocks look so good one quarter and look so bad the next. And this is one of the reasons why I trade and I don't hold into earnings reports. Check out Williams-Sonoma, that beautiful move up in August. When this was a stock I tried to trade a few times, I kept getting stopped out when it would get to key support levels. I thought it would hold 67.50. It didn't. Thought it would hold gap support at 62.5 or 62. It didn't. Started to strengthen into earnings, but you can see the meeting expectations on the top line, a slight beat on the bottom line, and then inline guidance, not good enough. Williams-Sonoma dropping, and at this point, maybe down around this gap support zone, 48 to say 51. If we continue dropping, that would be an area I'd be looking for, maybe some buyers to come in, but otherwise just not a very good report. Shoe Carnival actually came in with a really nice report. They gapped up, pulled all the way back down, have filled the gap. We're going to see whether or not the stock holds here. But they came in with a really nice beat. Revenues, $269.2 million versus $266.4 million. Bottom line, 76 cents versus 59 cents. And they raised fiscal year 19 revenues and earnings per share guidance. So I think they're just consolidating sideways in an uptrend. I still like the stock, even though it has reversed off of the earlier gap up. We could not get a breakout on that opening gap. And that's one of the things I look for. I like to see where these market makers open these stocks after they come out with these big earnings like this. Here, we did not take out resistance, and the selling was almost encouraged at the open. We came back down, filled the gap. I would be watching now, I think 35, 36 on a closing basis, pretty big support. And you've still got major resistance just above 44. So as it weakens, I actually think your reward to risk strengthens here. Finally, Viacom, VIAB. They did beat on the bottom line, beat on the top line. I did not see anything in terms of guidance here, but 34 is clear resistance. We have seen many tests up at 34. So as I got up close to 34, I'd be a seller until I saw that breakout. Okay, within the market, I want to take a look at a few things here. First, let's take a look at the S&P 500. If I pull up an hourly chart, and this is what I'm watching, because most daily charts, most weekly charts, not looking really good right now. We are holding that February low, so from a price support standpoint, everything's fine. What I'm looking to see is, can we generate enough strength to hold on to these rising 20-hour moving averages? We had failed on the way down to get through the 20-hour. Yesterday, when we rallied, we got through it. We opened beneath it today and then rallied back up above. And you can see right now, this is not exactly a huge surge at this point through that 20-hour moving average. I want to see the S&P really take off, and getting back up and clearing the recent reaction highs around 2740 to 2750 is what I would look for. We got as high as 2739 before turning back down today. Let's hold on to this 20-day moving average. The NDX on an hourly chart, we are back below the 20, sideways consolidating. I think if we move to the low of the day, this is not going to be a good thing this afternoon. So I'd like to see the NDX strengthen, get back up above that 20-day moving average. Let's take a look at a couple other individual hourly charts. Let's take a look at the XLK technology. Technology above the 20, trying to hold on. This is going to be pretty important. But you've got other areas like the XLY that have not been able to get back through the 20-day. And there's a lot of overhead resistance at this 107 area. A lot of struggles here back in October. Support here, and then we went below it. Failure at 107. XLY moving above 107 would be bullish. XLC, you can see the XLC struggling to get through about 45, 45 and a quarter. We have our lines drawn to the upside on many areas of the market. We need to negotiate that to the upside. If not, could be problematic. All right, Erin, I know you've got a handful of upgrades, downgrades. What you got for today?
All right, I do indeed. And I'm not going to talk about NVIDIA just because you already have, but it was also downgraded today. So let's look at a few of the others. All right, we've talked PG&E a little bit, but I did want to show you it again. We did get an upgrade on it today. Now, if you recall, we recently had gotten some downgrades on it. Citigroup actually upgraded from a neutral to a buy. I suppose if you really want to play this, you could play this on that upgrade. But as I was telling everybody, this is the utility company from Southern California that's now being investigated regarding their power lines and whether they were sparking or not to cause the fire. There's a lot of talk that there is. Now, of course, it looks like a couple of bottom feeders got in here and are enjoying a little bit of a move to the upside. But this one, besides being volatile right now, I would stay away just because you just don't know what's going to end up happening as far as that lawsuit that is pending, or that investigation that is pending. I suspect if they end up in a lawsuit, it's going to be pretty ugly. All right, another upgrade today. We had Phillips 66, PSX, US Capital Advisors upgraded it from a neutral to a buy. I thought this one looked interesting, as we always say. I was looking at the support level here at about 93. You can see here, lines up with these tops right there. Could be forming a little bit of a double bottom. I don't look at this necessarily as a true double bottom, only because the middle here is pretty, kind of a consolidation rather than a kind of a V top. But I think you could still make a case for it and look for a move to test up here. But the problem I have right now is that 5,200-day EMA negative crossover, because that's a long-term trend model sell signal. And when you get those, when the 50 is below the 200-day EMA, you need to think bear market, and you need to think bear market rules, meaning you should not expect bullish outcomes, to bullish chart patterns, to, just bullish signs on the chart. If the 50 is below the 200, you need to walk in cautiously as far as looking for a bullish outcome. So I would say cautiously optimistic on this one. Another reason why I would say that is we are seeing the PMO trying to curl to the upside. Okay, so let's look at another one. Qualcomm was upgraded today from underweight to equal weight by Morgan Stanley. It looks like investors are liking this upgrade. You could see that this $54 level, it dipped below it, but it doesn't look like it really closed below it. Seems to be a pretty interesting area for support, lining up right here with that June low. But what I'm really looking at more closely is the right-hand side of the chart and this big gap that we had, that gap down. And that gap needs to be closed. I don't know that it will be, but you've got the PMO trying to turn up. It's decelerating in oversold territory. But there you go, 50 heading toward that 200-day EMA. And the only way it's going to avoid that long-term trend model sell signal is if price gets above it. All right, there were a couple of other big name upgrades that I'm not going over. DSW, Edison, which is the other utility company here in Southern California, was upgraded. Armstrong Flooring AFI and Omega Healthcare, two agencies upgraded OHI. All right, let's look at a few downgrades. Home Depot will be our first. B of A downgraded Home Depot from a buy to a neutral. I think this one, we're really getting ahead of ourselves here, but this one would be the kind of double bottom I would be looking for. I like to see more of a V top. So if we can get that support level at 170 to hold, and you can see that's really very important support, at least it has been for this year. So if we can continue to hold that level, if we get down here and bounce off that level, I think we would be looking at, to have a rally up to that, the center of what could end up being a double bottom. But again, there's a warning sign. 50 is about ready to cross below the 200-day. JCPenney, last one we're going to look at, has been in quite a downfall. It seems to be in not enjoying the fate of Sears, but certainly sharing in the fate of Sears right now as far as the decline goes. I think Sears is in the process of trying to file bankruptcy, and I think they got it to go through, but something to read up on. You can see the PMO actually is in a positive, has a positive divergence here. We have rising bottoms on the PMO, and yet we have declining bottoms on price, and that's considered a positive divergence. I'm a little leery, one, because it's a low price stock, but the other is that area, that 150 area, is going to likely be very difficult overhead resistance to get past. So one to maybe look at, but like I said, I'm not into those low price stocks. And finally, just to finish, Michael Kors was downgraded. NVIDIA, which we talked about, was downgraded by two different agencies. Companies, Applied Materials was downgraded, Energizer Holdings was downgraded, and Yamana Gold and Sabra Healthcare all were also downgraded today. All right, that's all I have for that. Tom, I think.
Yeah, no, I was just looking at those downgrades on Applied Materials and NVIDIA. Apparently, not just some of the investment firms, but you got a lot of traders downgrading the stocks as well, as you can see from their performance today, especially NVIDIA.
Oh yeah, absolutely. They're being punished.
Yep. All right. It is time to move into what's hot and what's not. And we have our regular special guest back, Mary Ellen McGonagle. How are you doing, Mary Ellen?
Oh, I'm doing well. Thank you so very much. Happy Friday.
Happy Friday. Do you have any special plans for next week for Thanksgiving?
I do. I'm going to the beach to a family friend, and my family is joining her family. So we're going to have a wonderful holiday celebration.
Wow. I think after this week, our beach, our ocean might be frozen.
Really? So continued. Well, I saw the snowstorm in New York, and boy, they're getting hit really hard there.
Yeah, it's they're getting hit a lot harder. Of course, I'm down much further to the south in South Carolina, just south of Charlotte, North Carolina. But it was cold here. I can tell you the last 4 days, we finally have sunshine. It rained for 4 days in a row. And it was just that cold rain, yesterday, I think that the high was like 38 degrees or something.
Oh my. So maybe some ice fishing.
Yeah, exactly.
We can give Tom some of our 80-degree weather that we've been experiencing lately.
And I'm sure you all would like to have our rain take care of those fires.
Yes, you bet. Oh my goodness. What a mess.
Yep. But anyway, I know you got a lot to go over, what's hot, what's not. So I'm going to let you take it away.
Okay. Sounds great. And indeed, it's been a super busy week, not certainly as inviting and as uplifting as we had hoped given the action midweek last week, but certainly a lot to speak about. And this week, as far as what's hot and what's not, the names that are popping up on the extremes as far as hot and not continue to be earnings related. So initially, I'm going to be covering some of the stocks on what's hot that have come out with strong earnings. Those are continue to be your biggest movers. Earnings season is certainly tailing down, but still having an impact. So a couple of names in the defense-related area. This first one, ticker symbol is CAE, and that is the name of the company, aerospace defense-related. And we can take a look at this big gap up. The company reported earnings on Wednesday, and the stock's up 9% beyond that. And the earnings were actually 35% greater than estimates. And so we can see the stock is reversing this downtrend. It's broken back above these key moving averages. The RSI is trending positively. And if we go down, we can see the MACD prior to the earnings had that positive crossover, but now it's above that net neutral zero. So that's one of the stocks. Another defense-related name, MOGA. Moog Inc. is the company name. And let's see if I can get that ticker symbol in here properly. And the stock gapped up 4% on strong earnings. And actually, let's see if, okay, I need to have a little bit of a slash there to go ahead and pull up the company, but it is Moog Inc. And the stock did report earnings 2 weeks ago. We can see that it gapped up then. The earnings were 10% above estimates. The company also has a 1.2% yield for those of you that are looking to get into yield returning stocks, but we can see it's holding up really well subsequent to that earnings. The markets overall have not been doing well, certainly over the last 5 trading sessions, but this stock really stands out as holding up well. Let's take a look at some other stocks. We're going to go into the consumer related area. Again, these are companies that reported strong earnings. This is Canada Goose, GOOS. We can see this nice gap up, and the stock's up over 14% for the week, and the earnings were actually 130% above estimates. This is a well-loved company within the retail consumer space. They started out with a very, very popular down jacket, but now they've expanded to all seasonal as far as their products. So super popular. Crocs, for those of you that remember those plastic shoes, well, they are back. And this company reported earnings. You can see it gapped up over 6%. And the company came out with earnings that were 250% above last year's quarterly earnings. And they were also 130% above estimates. Analysts, as guided by management, are raising earnings estimates going forward. And we can see this gap up. We now have an upward trending 10-day simple moving average. Your RSI very positive, as is your MACD. So this clearly, after it spends what appears to be a bit of time digesting this big gap up, there's certainly anticipation for more upside ahead. We can move on to another area, auto parts, another strong earner, auto replacements. This is DORM, Dorman Products, and they came in with 31% quarterly earnings year over year. They reported 3 weeks ago, but the stock is still extending that very nice uptrend. We can see it's up another 3.5% today. Estimates have been revised higher for both this year and next. It is looking a little extended. Take a look, it's overbought. The RSI is above that 70. MACD still quite positive. And then another auto parts company, AAP, and this particular stock reported this week, and then they gapped up 5%. They beat not only on earnings but on sales. It's advanced auto parts, and they revised their estimates higher. Another item that came out was the fact that their same store sales were the highest they've been in over 8 years. Management has put a turnaround system in place, and it does appear to be working. We can see the stock finding support at this upward trending 10-day simple moving average. RSI and your MACD are both positive. So that takes us into some of the stronger reporting in the way of earnings. Let's take a look at another area that is hot this week, and it is going to be financials, and in particular, foreign banks. And I want to take you over to Argentina. There was an event on Thursday where the IMF, the International Monetary Fund, they finalized a deal that's going to provide Argentina with $50 billion in emergency backup financing. Argentina has had a lot of trouble stabilizing their economy this year. Their peso lost half of its value, but the IMF did step in. Let's take a look at some of these banks in Argentina that are benefiting. This is IBN. The company is ICC Bank, and we can see this is Wednesday's announcement, the gap up. There had been anticipation of the move prior, so you can see that the stock did turn positive about 2 weeks ago. It's finding support at an upward trending 10-day simple moving average, and both your RSI and MACD are positive. We can take a look at another Argentinian bank that's benefiting, BFR, Banco Francis del Rio. This one is not quite as positive. We can see that it is responding positively to the news, but we still have a downward trending 200-day simple moving average that very well may act as resistance as the stock may continue to advance to the upside. And then one last Argentinian bank is GGAL, is the ticker symbol, Grupo Financiero. And this is another one that's responding positively, but we still have downtrending longer term potential resistance ahead of it. And then moving on to a different foreign bank, IBN. This is in India. And this particular bank surged primarily because the CEO is stepping down, and he's stepping down amid a scandal. There is a probe into illicit transfer of funds, but we can see the stock gapping up on the news. And also equally important is the fact that the stock really went into an uptrend back here at the end of October prior to this positive news, so very much in an uptrend. So we can certainly move on to other areas within the international markets and take a quick look at the Chinese stock market. And that market has been in a bear market. You can see this downtrend taking us back to the beginning of June. We've had several downtrend reversal attempts. We're not quite there yet. The market, the Chinese market prior to today was up 4.5%. It's down 1% today. And a lot of the news relative to potential reversals currently has been tariff related. Anytime there's a hint that the U.S. Chinese tariff trade wars will subside, the Chinese stock market has attempted to reverse. So you can see we're not quite there yet. We are going to need to see a reversal back above. This red line is your 50-day simple moving average. From there, your 200-day is going to be your next area of resistance. Your MACD is not quite positive yet, but there were some standout stocks within the Chinese markets that are certainly worth noting. Again, the market overall is not quite there yet, but this is Alibaba. This is their largest retailer. Some call it the Amazon of the Chinese markets. We can see that it is in the early stages of potentially reversing. It's now up not only above the shorter term 10-day, now up above the 50. So we could see a little more on the way of upside. This company reported super strong sales last week. The Chinese have a day that's called Singles Day. It's their antidote to Valentine's Day, where individuals buy items for themselves. And it's been really super popular. They had their strongest sales, record sales last week. So that Baba certainly would be a recipient of that. We can see the stocks trying to reverse. So we can look at a couple of other Chinese. These are ADRs. Changyu, CYOU, internet related. This one is further along in its downtrend reversal. It's above all of its key moving averages. The RSI is positive, albeit a bit overbought. And then the MACD is positive as well. We can take a quick look at another Chinese stock. It's an ADR, Sohu, and this is another internet related, again, earlier in its potential advance, but certainly worth noting, particularly if we do get the turnaround in the broader Chinese markets. This is Sina, and then one last one that we can take a look at, Momo. This is another smaller internet gaming type stock. This one I would advise is probably the worst of the bunch as far as being in a position of potentially being able to reverse. So let's go ahead and we can take a look at another area in the what's hot. And this is an area that a lot of people normally would shun, would not think about, but it's also a well-needed service. And it's something that I would argue could be viewed as defensive, and that is waste and disposal stocks. So let's take a look. Waste management certainly is one of the bigger names in the space. And the company also offers a 2% yield. So this company did come out with strong earnings. Analysts are raising estimates higher. And as a bonus, Waste Management offers a 2% yield. So let's take a look. The RSI is positive here. We can see the MACD had that positive crossover. It's now up above that net zero. And the stock is very much in an uptrend above all of its key simple moving averages. Another company that reported this week, and it is the number 2 in the waste disposal, is RSG. This is Republic. And the company is we can see how it is very much in an uptrend, really defying the downtrend that's been occurring here in the broader markets lately. RSI is trending positively, as is the MACD. Another bonus for these companies are they are going to be buffered from any tariff worries. They're very contained, certainly within the US. And one other item for Republic to note is for these trash haulers, volume of the trash that they haul is going to be a very important metric. And within that, it's going to bring a lot in the way of revenue. So Waste Management did see a 4.4% increase in their trash hauling metric year over year. It's very impressive. And also we're seeing a lot of traction in the way of natural disaster relief as these companies, we need cleanup. Some of this move may be related to the fires, certainly out in California. And then WCN is the last name within this space that we can take a look at. And this company is emerging, it's Waste Connections. They're emerging from an oversold position. We're not quite there yet. I'd need to see a break back above that red 50-day simple moving average, but we're certainly on the way. The RSI is positive. MACD is poised to turn positive. And Waste Connection actually has growth, but it's been coming from acquisitions. So it has not been so much from growing their business, but they have optimal positioning as far as their sites. They're located in some very prime locations and easy to get to as far as transporting their waste to these treatment and disposal sites. And then one last one, HCII. This company is an environmental services and oil cleanup, and they reported earnings this week. Came out with very good numbers. Stock gapped up 7%. And let's see if I can get this stock up. Okay, HCI, and we did it. And it's an environmental services and oil cleanup. And so higher oil prices have helped this company. It's a bit smaller, but we can see it's very, very much in an uptrend. And I may need to move on, but I very quickly wanted to talk about transports. We're seeing some of these rail stocks pick up. So CSX is certainly one of the names. These rail stocks really were the last to drop. They held up remarkably well going into last month's correction, but now we can see following a pullback to the 200-day simple moving average, the stock forming the right side of the base. It's poised to break out to a new high. The RSI and the MACD are trending positively. And I'm going to go ahead and move on to one last area that has been hot this week, some of these finance consumer loan stocks. We can take a look at a smaller company, Evo Payments. This particular company saw 271% growth this year, and they're growing. QIWI is another consumer loan stock, smaller, little bit earlier in its potential advance. The stock did gap up 13% on strong earnings. They offer online payment systems in Russia, Kazakhstan, Romania, and so forth. But again, we are a bit early in this downtrend reversal. Would need to see a break back above this 200-day simple moving average before the advance could really carry on. The company does also offer a 5.2% yield. So let's go ahead and talk about what is not hot. And certainly, while the California fires have been exuding heat, so to speak, there have been a lot of losers, if you will, relative to the impact of these fires. And I know it was talked about earlier as far as some of the utilities, but let's take a look at PCG. And this is PG&E. You can see the stock is just really damaged. A lot of downside here. The company actually is they're being blamed for what's called the Camp Fire, which is now on track to be one of the deadliest fires. The stock's down 56% this week, although actually I'm seeing that it's gapping up. And today's gap up of 36% is because overnight the California Utility Commission said that they would not allow the company to go bankrupt. They would support it. So actually this week we're down 20%. This is on top of last week's 15% drop, but really, truly very damaged. The potential liabilities are as much as $17 billion to PG&E because of the potential fire starting due to an explosion at one of their utility facilities. Let's take a look at another related stock, as it were, to the damage within the wildfires out here on the West Coast. This is PGR, Progressive Corp, and they are an insurance company. The stock got hit. It was down as much as 11% this week. And the reason is because insurance related, the fires, and the potential impact to revenues relative to that. And I will tell you that this company has dropped in prior periods with other natural disasters. I can take you back to 2017 with the flooding back in Houston. This would be the fall. And you can see this is the drop here in October, and the stock was able to very much bounce and carry on. So this one, we're on the prowl for a reversal of that downtrend. Let's take a look at other areas that are not hot this week. And I will tell you, biotech stocks. And biotech stocks tend to perform well in a very healthy bull market. We are certainly in a risk-off type of environment. This is BIB, and it is an ETF, the NASDAQ Biotech ETF, and you can see that for the week, it is certainly down, although it is gaining traction today. One of the bigger stocks within BIB that is not doing well is Celgene, CELG, and we can see that the stock is continuing to deteriorate in line certainly with the correction and the broader markets. Let's move on to another area within healthcare, and this is going to be managed care. These stocks were real winners following last week's midterm election because of the thinking that Obamacare would be untouched with a split Congress. However, this is last Wednesday's gain. This is Molina, MOH. They are one of the largest Medicaid managed care, and they did have a very strong day last Wednesday following earnings result. Unfortunately, the stock has given those gains back and then some. HUM is another one, managed care, that had a big gap up, and it is certainly reversing that with a vengeance. We can see the RSI is now negative. Take a look at the volume on that decline. That is not what you want to see. And then one other area or one other stock, CNC, is another managed care. Again, had this big gap up following those midterm elections, and the stock is finding support, but overall it's generally in a downtrend. So let's take a look at another area of the markets that are being impacted, in this case, from the higher interest rates that are out there. Now, we did touch upon this last week, and that is housing stocks. Let's take a look at DHI. This is DR Horton, one of the bigger housing stocks, and we can see that due to reduced demand for their housing, the stock has gapped down. So really, within housing, you can pretty much look at any of the stocks, and they are truly just not doing well. This is Toll Brothers, TOL. We can see this gap down. RSI is negative, as is the MACD in negative territory with a negative crossover. LGIH is another. We could really just go on and on. Actually, LGIH is having a good day today. It's up 6%. It's bucking the trend in that. And I will tell you, though, if you are looking to enter a stock, particularly it's showing strength, normally the action in the group is going to dominate the really steer the direction for any stock within it. You'd be better served buying a weak stock in a stronger group. So even though this stock is rallying today, there's, I'm sure, news out there about it. This is not a stock that I would look at. Let's take a look at consumer staple stocks. They have been really quite strong, but there are a couple of names in there that are getting hit this week, and there are very sound reasons. Let's take a look at Conagra Brands, CAG, and the company came out with very weak earnings, and we can see the stock really gapped out. They did report earnings about 7 weeks ago, so we're taking you back into this gap down here is when they actually reported their earnings. The stock did attempt to rally, but has subsequently reversed. And analysts are revising their earnings estimates down for Conagra for not only this year, but also for next year. And let's take a look at another consumer staple stock, and it's ADM. This is Archer Daniels Midland, and they are, in fact, the number 2 producer of ethanol. And ethanol has really been impacted because the Chinese have reduced their import of this product. They were on track to import 200 million gallons of ethanol this year, but instead they've been out of the market, and this has everything to do with Trump's trade war. So it is really impacting ethanol producers, and ADM, unfortunately, is one of the stocks that is being impacted. Let's take a look at a couple of companies that are also negative, and they are earnings driven as far as the reasoning. We can take a look at Walmart. Walmart has really, going into their earnings, had been just a superior stock, truly ignoring the downtrend going on around it. I would argue that at this point, the stock was pretty much priced for perfection, and they did come out with earnings. The earnings were good, but the sales lagged, and the street took note. The stock was down 6. Now it's probably down closer to 8% on the week. The RSI is now negative. And then the MACD did also have that negative crossover, that black line down through the red. Currently, Walmart is finding support at an upward trending 50-day simple moving average. So it will be interesting and of note to see if it's able to hold here, because a break below that, your next potential area of support is going to be that 200-day simple moving average. And we can take a look at another well-known retailer that reported this week, and that's Home Depot. And it is surprising. The company came out with earnings. The stock gapped down 5%. The numbers were not good. Interestingly, we've seen stocks such as Home Depot really pick up in the aftermath of natural disasters, with an eye toward individuals needing to rebuild and refurbish their damaged homes. But in this case, no such luck. They did again come out with numbers that were weak, particularly on the sales side. So those are some of your what is not. I can circle back. I do have a little bit of time, and we can talk about a few other areas that have been hot despite a difficult overall broader market environment. And these are also going to be earnings driven. And it is stocks that were really deeply oversold. They came out with good numbers. Let's take a look at an example. And this overall, during this entire earnings season, your biggest winner have been stocks such as these. They are deeply oversold. They come out with good numbers. Take a look at this downtrend. This is Covia Holdings, a smaller stock, but we can see that this downtrend started well before any correction in the broader markets. They came out with strong numbers, and the stock was up 21% in response. Now, as far as expecting any further advance, we would need to see a break above this 50-day simple moving average, which is in a downtrend. A break above that, we could very well see a move that would double it if it were to then advance to this next possible area of resistance. Let's take a look at another smaller very oversold stock that reported strong earnings. It's High Crush Partners, HCLP. And take a look at really just how oversold the stock had gotten. We can see the RSI well below that 30, MACD trending downward. This is upon the release of their earnings. Stock is up over 20%. We very well may see a bit more upside to this downward trending 50-day. There's not a whole lot to stop it, but then beyond that, you very well may find resistance at that downward trending 50-day. We do have time for one more. Again, a deeply oversold stock that came in with strong earnings. This is SFS. The company is Smart and Final Stores. They're a regional discount supermarket, and we can see really how oversold the stock. It's not terribly liquid, but it is worth noting that the stock did have a huge advance subsequent. It's up 32% following yesterday's earnings release, and it looks poised for more upside. You can see the big volume there. MACD just now turning positive, as is the RSI. So this very well could have a bit more in the way of an upside advance.
Mary Ellen?
Mm-hmm.
First of all, wow. Okay, that's a lot of stocks you just went through.
Oh, yeah.
But
I still have more.
I got a question for you.
You bet.
I was looking at the apparel retailers. Of course, they had been one of the hottest areas in the market throughout 2018. And in the last week, the group the DJUS RA has been straight down. I probably lost 10% in the last week. But yet one of the stocks in that space, Shoe Carnival, just reported earnings and gapped up, but then sold off. And so I was just curious, when you look at a group like apparel retailers, which had been so strong and have pulled back now so substantially, but you've got a stock within the group like Shoe Carnival that just beat top line, beat bottom line, raised guidance. Do you take it? I mean, would you take advantage of this pullback after the gap up, or I mean, what do you think when you look at a chart like that?
Yeah, that's a great question. And it's been very indicative of what we've seen within consumer discretionary stocks really for the entire year. There have been just a pocket areas of strength that are defying what is going on around them. And Shoe Carnival is one of them. Take a look at this gap up. So this is reported quarterly earnings going back last year. The stock trended sideways, gapped up again on strong earnings. So you will see this type of action, but overall, this particular move here is kind of muddled. It's not as clear cut, but we can also see that subsequent to any gaps up, Shoe Carnival has really kind of trended sideways, in essence, kind of digesting that move. We can look at other areas. Shoe Carnival would certainly be in the same area as Crocs. I talked about that stock earlier as really coming in with superior earnings and gapping up. Again, indicative of these story stocks, these companies that are doing something different relative to new product development, and they're able to withstand the downward pressure around them. And so all of last year within the consumer space, it was very, very specific. It was home retailers, it was shoes. So interestingly, it appears as if we are seeing that same type of concentration, but the guys that are really suffering are the manufacturers and those that are over in China. And that's where we're seeing, you can look at an RL, Ralph Lauren, and stocks in that space. These are the manufacturers of the apparel, and those are the space. That's the space currently that's not doing well.
Yeah. All right. Well, given, I mean, you just went through I don't even know how many stocks you went through, but you went through a bunch of them. Mm-hmm. But if we get away from the individual stocks and you just look at what the S&P 500 has been doing before you leave, any thoughts on the overall market? With all this volatility and this movement back and forth. I know just recently, a few minutes ago, I saw the S&P, really moving to the upside. Do you think some of the worst is behind us? Or are you still cautious? What do you think about the overall market?
Well, I'll tell you, last week we did have very positive after the midterm elections. We had one of the indicators that I need to see is what's called a follow-through day, which is has occurred at the bottom of every single market reversal. And we did actually get that follow through day. That's where the markets are up at least 1.2% on volume that's greater than the prior day. But since then, that follow through day has pretty much failed. And that's not what you want to see. We're still generally in an uptrend, but it's lost its luster given the recent downtrend action that we've seen. I'm pulling up the stochastics. This is another, we need to see the stochastics get up above that 50. So cautiously optimistic is where I would say that we are. Certainly if we see today ending on an up note, that would be encouraging, but still recommending keeping a lot of cash on hand. We're not out of the woods yet, and we still have work to do.
All right, fair enough. Well, we always appreciate you coming on here. I know it takes a lot of time getting ready and preparing for everything that you deliver here on Fridays. But again, thanks for stopping by. Have a nice
you bet.
evening next week, and we'll talk again soon.
Oh, that sounds great. Have a great weekend.
Yes.
Thank you so much.
Thanks.
All right, Erin. Well,
Yes.
we've got 10 and 10.
10 and
You
10.
ready?
Of course I'm ready. Let's look at that RRG.
Right.
All right, so this is what we have today. Couple of outliers, go for sure. Most of these are turning into that weakening category from the leading. So I thought that was interesting to look at. And then as far as requests go, healthcare seems to be the winner today, followed closely by technology. So let's go ahead and get started. And first one is Funko.
All right. Well, I set this one up on a weekly chart because, first of all, this has just been a crazy stock. It made a huge move. We're talking about a stock that was under $6 back at the beginning of 2018, went up over $30 in early September. Clearly, a lot of excitement around the stock. Volume was picking up throughout, but that's a pretty ominous weekly candle right there on massive volume. So I think the stock's trying to get its feet under it right now. And I plotted Fibonacci on this weekly chart to show from that low all the way through to this high that we saw a couple months ago, a 61.8% retracement, which you really don't want to see it go down much further than this, is just about where we're trading right now. I think if we go back down and fail to hold the low of this week and from last week, I think we could go back to where the IPO price was, where we opened with the IPO back in October of 2017. That's where we kind of hesitated a little bit before we went on this straight up move throughout the summer. So I'm watching the current support area pretty closely. I think if I was in it, I'd want to see a turn right about here back to the upside. Honestly, I was hoping we had already seen a turn and we were starting to put a cup in after we'd put those lows in around 18. And that was not the case. Volume picked up. We lost that support level. And now from a Fibonacci standpoint, I would be watching $15, $16 pretty closely here.
Okay. Let's see. The most popular in the chat room is Anthem Health, ANTM. They're asking, is it about ready to break out? Because the Chaikin looks good, PMO looks good, RSI looks good. What do you think?
I like the stock. Yeah, it's in a nice uptrend. A couple areas. There's your gap. Whoops. There's your gap support right there, where you gapped up on very heavy volume, went from 275 to 290. We came back to about 276, literally within about $1 of that support area, and now moving back up. Right now, we're in this trading range. I think the PPO looks great. We could certainly get that breakout. If I had gotten in on this pullback, which I did not, but if I'd gotten in here, I'd probably be taking profits, up in the upper 280s to around 290, just because that's where the sellers came in a couple of weeks ago. But overall, I think the move up, sideways consolidation, breakout with volume bodes well. I see ANTM going higher. But again, I would trade the trading range until we get the breakout.
All righty. Next one I'm going to give you is Cronos, CRON.
All right, cannabis stock.
Mm-hmm.
Yeah, I mean, just created a very, very wide range from all that volatility that we saw a couple of months ago back in September, really even a few months ago, dating back into August and September. But, all of the speculation, all of the hype began back in August and September from a low down below $6. And you can see the intraday high went above 15. We're talking about in a month. This was a pretty significant move. So just understand that you're trading a stock that's extremely volatile. And, that's the wide trading range that I could see it going in. either back down to the 570 area or back up to 1370. From a more intermediate term perspective, I mean, we certainly could follow the overhead resistance that was established from the early November low. So let's go ahead and take a look where that would come in. And I'm going to say that's right about there, which along with the 50-day moving average, I think is going to provide some overhead resistance. So let's say 980, 990 is going to be short-term resistance. The stock's at 860 though, or whatever, 867. So it's got upside capability here. To the downside, I would be probably looking at the same thing, recent low that we just established around $7. So, I mean, there is more of a short-term trading range, if you will, but it's in the middle of this wide range. I don't know where these stocks are going to go. The cannabis stocks have been all over the place. A lot of hype built into them earlier. Now they're coming back, probably some value, beginning to creep back into them. But I would trade this short-term range.
Okay. Next one from technology, Teladoc Health, TDOC.
All right. Not too long ago, this was a very hot stock. Not hot anymore, though. This has been pretty much downhill for quite some time, with the exception of this brief move above the 20-day moving average. That has been a problem for the stock to try to negotiate. So for me, I would not be looking at it until we can see some volume come in and get back through this 20-day moving average, which has been resistance. The other thing I think that you can keep an eye on is we did have a double bottom in right at about that 62 level. You can see the first initial move, the bounce, another move, false breakdown. We got a rally, false breakout above the 50, and now we have moved back down below this area of support. So now that becomes resistance. You can see earlier today, got up almost that $62 level, failed. I think we got two key levels to the upside to watch: 62 price resistance, and then that declining 20-day moving average, which is 64.09. Until we can get through both of those, get a little volume coming in, I would be a little cautious here and be expecting more downside action.
Okay, next one up, our only communication services request, Comcast, CMCSA.
All right, nice move to the upside, breakout. I would be careful if you get some sort of reversing candle, dark cloud cover, bearish engulfing, something like that. And the reason is that the PPO here is just a little suspicious. Now it's early. I think that this could turn right back up. PPO could go higher, but at least in the near term, we have a very slight negative divergence here in that prices are trying to move up with a lower PPO, and volume so far today on this potential breakout is somewhat light. So the volume's telling me that maybe we're running out of steam to the upside, and the PPO is starting to tell me the same thing. So if I get a reversing candle here, I would not take any chances as a short-term trader. I would be looking maybe, if we close back down around 38 or 38.10, 38.20, that to me would be a reversing candle. I would actually be looking for that 50-day test, and also where I would consider pretty good gap support right at about that 36.5 area. So those are some things to maybe look for.
All right, excellent. Let's see, consumer staples, food retailer, Casey's General Stores, CASY.
Yeah, I was bullish on the stock. We got the breakout. The problem I had with it is that the volume, there was no volume down here. I don't know if we did this on 10 and 10, or maybe it was one of our segments that we had done recently, but I remember talking about this one on the breakout, not really trusting it in the near term because of the lack of volume. But we went back down, put in a pretty nice reversing hammer right on the 50-day moving average, and looks like right about on trend line support as well. And the volume there was probably heavier than on the day we tried to make the breakout. So I think we got some buyers coming in here. I think we've established the low on Casey that for a stock that's been trending higher. I think this is pretty important, but I think that low is a pretty important short-term low now. And I would be looking maybe for a return back up to about 132.5, 133.
All right. Let's see. For our Canadian friends, the only Canadian stock, Canadian Tire Corp, CTC/A.TO.
All right. I didn't know that ticker symbol.
No, I didn't either.
Okay. I like the gap up and going back down and potentially filling this gap. I actually think you're getting close to an area where you could take a shot. Not so much because I like the chart. We are still trending lower overall, but I do think you could get a bounce. And your reward to risk as you get closer to that gap support I think continues to improve. So let's take a look here. I think I may have grabbed the wrong. There we go. So let's take a look at the gap support area, which is right about around 150, maybe just a tad below. But this was a stock that was up at 166 and change on a close a little more than a week ago. So as you get back down close, I could put a pretty tight stop in here below 150. If you wanted to give it a little more room, you could go all the way down here to 146, 145 and change. If I did that, I wouldn't buy all my shares at this 150 area. I'd buy half, and then buy the other half close to 146, and then maybe have a closing stop below 145 as your stop. So you don't have a whole lot of risk in that case to the downside. Your move back to the upside, your target would be around 166. I think that would set up for a pretty nice trade. So I'd be okay with this one. A little bit more weakness, I would consider pulling that trigger.
Okay. Number 8, Cowen, COWN, Financial.
All right. Well, financials, you would think with interest rates, well, interest rates aren't moving back up right now, but with an overall uptrend in rates over the past several months, you'd think many of these financials would be doing better, but this one is not, and many of the financials are not. Sideways consolidation. I'm a momentum trader. I look at a chart like this and I just don't see it, a trade. If I had been interested, it probably would have been back in October and I would have gotten stopped out. I got stopped out in a lot of stocks in October. But this one was in a clear uptrend. PPO was nice. I would have expected a 20-day test there to hold. It didn't. Continued moving down. Big volume too on that move. Short-term rally, another new low. Short-term rally, and here we come back down again. I just don't trust the stock at this point. So if I had to annotate some key areas maybe to watch for a reversal, I think that the low that we saw in August was retested in October. So if we move back down closer to the 1435 area, maybe, if this is one that I was really interested in, that price could begin to attract some interest. And maybe like the last one I talked about, you could maybe think about a couple entries, 1435, maybe 1375, and then keep a stop on a closing basis below that level.
Okay. Let's see. The next one I'm going to give you is JCI, Johnson Controls. It's building materials.
All right, JCI. All right. Well, first of all, I can tell you right now, when I see a candle like that, that is a sell signal. And I know it's hindsight right now, but if I saw it the day I owned it, that day I would have been out of it. Anytime I get something like this where you can see the breakdown of this prior support, and we had multiple tests of it, I think $35 was pretty important. We broke down, volume was much heavier than normal. And then as we come back up, false breakout above 35. And that right there, taking out that prior high and putting in a shooting star off of an uptrend and the 50-day moving average, PPO at the center line in a downtrending overall stock, that is just a hit over the head to get the heck out of the stock in the near term. And if it keeps going higher, so be it. But that to me is a warning sign. I don't like the stock. I think you're still in this downtrend. Breakout above 35, we got something to talk about. Until then, I'd be careful.
All right. Last one for you is ATO, and that's Atmos Energy. It's a gas distribution company.
Wow. Not too many energy stocks of any kind doing this. So you got to think that this is a pretty nice little sideways consolidation breakout. Yesterday's volume on the breakout was strong. Got a prior uptrend, all this sideways consolidation, good volume trends. PPO looks good. I like it. I like it on the breakout. I like it even better if it were to pull back down to around 97.5. If it did that, I could buy it with a pretty tight closing stop below that rising 20-day moving average. That's been holding its support. So pullback looks pretty good on ATO.
All right. And that does complete the 10 and 10 to 1. I will have all of those annotated charts up for you in the Market Watchers Live chart list. So you can go to the blogs tab, click on the Market Watchers Live blog, and the link to the chart list will be right there at the top. And the charts that you just saw Tom annotate will be exactly the same there. So you'll want to go check that out if you want to keep some of those for yourself. All right, time to get into our final market update. It's looking interesting, Tom.
I am sure it is. Today's a big afternoon, I think.
Yes. All right, so let's get to it here. All right. Okay, so what we're seeing right now, of course, is some moves to the upside now. You know, we had started the day down and started to make the move to the upside, pulled back to yesterday's close, and now have started back up. So the rising trend that started yesterday is still intact right now. S&P 500, same situation, but they are starting to pull back a little bit, and we see that it is almost unchanged right now. But reading down 1.36 points for the S&P 500. NASDAQ has spent the entire time lower on the day. Looks like it poked up into positive territory one time, but is not anymore. NASDAQ is actually down almost 0.5% right now. We can see OEX is now back into the negative area, down just slightly at 0.04%. Mid caps moving mostly sideways today. But the volatility is about the same. It's really in a consolidation here. We did poke out at one point today, but we're heading back down, and the mid caps are down currently. Russell 2000 also spending pretty much the most of the day in negative territory. It is currently down 0.31%. TSX almost unchanged right now. TNX, the Treasury yields 10-year, are on the decline, currently reading 3.077%. UUP, big gap down for the dollar and now moving sideways. Not to be outdone here, we have a big gap up on gold, and it pulled back, but it is trying to make a move back up. Really pretty much that reverse correlation is really right on today. You can even see the bend on UUP and the dollar, and look at the bend right here to the upside on gold. Very interesting setup there. TLT continuing a rise that started yesterday afternoon. Really nice rising trend. It's now broken above this week's tops that we saw earlier. It is pulled back just slightly, but TLT is up over 50 cents, reading 114.61. And USO, wow, interesting day. Big move to the upside this morning, pulled way back to negative territory during lunch, and now it is back up in positive territory. USO is up 6 cents to 12.04. And that's all I have for my portion of the market update. What you got?
All right, I just want to go through this really quickly, but here, this is from my blog article yesterday morning, Historical Tendencies. Just wanted to mention breaking news here next Thursday, Thanksgiving Day. But over the last 6 years, the week of Thanksgiving Day, the NASDAQ has actually moved up 22 trading sessions and lost ground just twice during Thanksgiving week over the last 6 years. So anytime we get near holidays, the market tends to get into a festive mood. You can see that annualized return for that week of Thanksgiving over the last 6 years, 113.4%. So definitely a bullish bias. Today's historical tendencies in my blog, I highlighted the Russell 2000. And after the upcoming Thanksgiving week, you can see that November 23rd through December 6th, look at the annualized return on small caps. 7th through the 15th, we go through a profit-taking period, and then another big push in the second half of December through year end. So historically, things are lining up for the more aggressive NASDAQ and Russell 2000. Here, I'm looking at the Russell 2000 hourly chart. We got back up above the 20-hour moving average, failed twice earlier today, and now we're trying to hang on above it. The only problem I have with this chart, when you go back to the end of October and you look at the final low, lower price, rising PPO, so we had slowing momentum to the downside. Here on our last low, the PPO was still lower. So what this tells me is if we roll over and start to move down again and perhaps take out that low of the day this afternoon, I'm going to be somewhat bearish. But if we can continue to rally, holding the rising 20-hour moving average, I think this could set up for continued weakness as we get into some of these bullish historical periods. All right, Erin, I know you got the sentiment. Back to you.
Yes, I do. So let's get that going here. All right. Just let me know if everything looks good here. If it doesn't.
Great.
Perfect. All right, so let's do the decision point sentiment update. We have about 10 minutes here. We'll do what we can. This is for November 16th, Friday. Very interesting numbers. Of course, I say that every week because I think that sentiment is interesting every week, but some interesting charts, particularly today. We'll be looking at the 10-day moving average of the put-call ratio, AAII, NAME, RIDEX ratio, the VIX, and gold sentiment. So let's get started and move on through. So the first thing we're going to look at is the put-call ratio. And before I really get too far into this, remember, sentiment is contrarian. So when everybody is feeling bearish and the indicators are very bearish, that's usually the time for a reversal, a price reversal, so to the upside. So just remember that it's contrarian. Sentiment is considered a contrarian indicator. All right, so as far as this chart right now on the put-call ratio, I'm not seeing anything overly exciting here. We did get the bottom in oversold territory, and we did start the rise out of it, and that coincided with the rally, which is what we expect when we get these lows on the put-call ratio, the equity one, the CBOE. And the one thing I just wanted to note is that here's the 1 mark. This is really where you're kind of a neutral. That's your neutral spot. And what I've noticed is we've stayed below that area, stayed below that neutral area into the bearish sentiment area. And you don't see that too often. You can see we've had it a few times. But what I am going to be watching very closely is to see if we get a top here below. And I think that could be bad news at this point for the market, at least until we pull back and can start another up leg. But I think this would point to some weakness for sure in the put-call ratio here and in the market in general. Should we see it start to vacillate right here below the 1 mark, the 1 reading mark. So as I said, I invert the scales because, as I said, sentiment is contrarian. So oversold conditions on this means that we have very bearish sentiment. So that's why I put it at the bottom, because again, contrarian. Bearish means bullish for the market. So we did see that move out of that low on the put-call ratio, but I want to see it get above, and we're not seeing that just yet. The AAII chart is actually a little bit on the boring side today. You can see that bulls and bears are almost exactly equal. One thing I would note is that if you added up about 30, let's see, so 70% are, have given an opinion, and the other 30% are pretty much, I don't know, they're sitting in neutral. So I would say this is about as neutral as you can get for sentiment and in the market. And you can see right here that we are at the 1 mark, just below it, meaning that we do have an equal number of bulls and bears. And like I said, I do like to pay attention to how many neutrals are out there. So right now I would just say, this chart is saying that investors are mostly neutral because we're just not getting a reading to one side or the other, which means this chart honestly isn't telling us that much, except that sentiment is neutral as far as the polls go. This is the NAME, National Association of Active Investment Managers. This is the interesting chart. We got a low reading Thursday. This is the lowest exposure we have seen since 2016, early 2016. What this chart is telling you is how exposed these money managers are to the market. And they have pulled their positions way back. We're looking at a reading of 35. So this tells me that they are feeling very bearish right now, and have, obviously since last week, because that's this reading came in on Thursday. So that tells me there's 2 things that tells me. First of all, you have to be aware that sometimes these are a bit lagging as far as the bearishness. And what I mean is that a lot of times these guys are right. So you might see a continuation of what's been going on, and in this case, to the downside. So we might be seeing some more bearish activity, because I do think this is a lagging indicator to some degree. But having seen it pull back by this much, I would read that as very bullish for the market in the coming weeks or so. So I thought that was very interesting. Whenever I get these really climactic moves on any of my indicator charts, they're almost always significant in some way or shape. And as you can see, when we get those low readings, typically they come before a rally. But we can see that low reading that we got really in early 2016. We did get a week, like I said, a week or two, looks like a week of upside, and then we started to pull back. So, that's why, I mean, these guys sometimes are, on the right side of things. So sometimes it's a little bit lagging. But at this point, seeing all of this move, this exposure to the downside, they're feeling extraordinarily bearish right now, and that would be very bullish for the market. All righty. The RightX asset ratio. This is an indicator that Carl came up with, Carl Swinland, my father. And what he did is he found that RightX was a company that managed some mutual funds. And what they would do is at the end of the day, they would report how many assets were in each of the funds. And by looking at how much money was in the assets going back and forth, we could see money flow. And that gives you an idea of what's going on as far as money. I mean, you can have these surveys, AAII, it's finger in the wind. I feel like I'm bullish. But then you look at the chart and the RightX ratio, and the bear funds are increasing. So that's why I always consider these charts, the RightX chart, probably the best sentiment chart that we have, because it does show where the money is actually going. So what is this chart telling us today? By the way, these are no longer managed by RightX. Guggenheim now manages these funds, but they are still in existence. We just call it the RightX ratio, so we keep the RightX name just for consistency. So what is this telling us? We'll get to the RightX ratio in a moment. But what I want to note for you is the bear funds are getting really, we're seeing the assets leaving pretty quickly here out of those bear funds, which I think is very interesting. And we're now seeing it get back below this 200 reading, which I would consider, this is very overbought territory. So now we're starting to move through and get back into that, where we usually see movement back and forth, where we see the oscillation on the bear index funds. But we have had, certainly not a surprise when you see a decline like we have, to see an increase in the bear funds. But what's important is to note when that gets really stretched out, like we saw here and like we saw there, people are very, very bearish in that case. So you should expect an upside move. You can look at this one right there, came in right before that rally. Let's see, this one came in probably right, looks like right about here. So that one didn't come out exactly the way we want. But typically what you're going to see is when we get the very bearish activity, a lot of money in the bear funds, that's going to be a problem. So right now we're looking at those decreasing. But interestingly, this last week, we saw the money market assets increase. So we combine these two, and we consider those your bearish sentiment. And then we have the bullish sentiment. And the bull sector funds have been consistently on a declining trend. And we're near the very bottom at this point of assets in these bull sector funds. So we're talking about very bearish thought processes going on here. We're not getting that reinvestment into the equities at this point. So that could be considered a bit of an issue. But to the bearish side, right, you could consider that everybody's feeling pretty bearish. Obviously, they're pulling out of the bull funds, but they're pulling out of the bear funds too, and money markets are starting to increase. So to me, what I'm looking at here is kind of a neutral position. There's some basically investors are coming out of the working funds, is what I would call them, and moving into to cash. So they're feeling neutral. They're not overly bearish, but they're not at all really bullish either. So I think with this chart, because we're getting these divergences, I would consider the chart mostly neutral. But now we come up here and we look at that the RIDEX asset ratio, and we are in very, what I would call, oversold territory. And again, I've inverted the scale, meaning that the bottom is considered oversold because people are very bearish, and you should start to expect that bull move. Right now, the ratio is very oversold, and we're not getting much movement on it. So I don't think it's telling us too much, but the fact that we do have such low readings on it, that does tell us that there still is a preponderance of bearish assets and bearish activity going on there. So that is bullish for the market. So long story short, RIDEX ratio, I think, is showing neutral to bullish for the market. VIX, really not telling us much. We're sitting on the average. The only thing I would note is that, we are starting to see a decrease in the Bollinger Bands and in volatility in that way. But the readings are still very high. I'd like to see those get a bit lower. So we're still seeing some bearish activity on the VIX, but it's sitting on that average. So I'm really not seeing anything important on the VIX to really discuss. And to finish off, we're going to look at the gold sentiment, and we do that by looking at let's see here. Let me get to the right. I just moved my charts. I can't see. Okay, there we go. So you can see very bearish activity here. And this we calculate from the premium and discounts from the Sprott Physical Gold Trust. And you can read more about that in Chart School, but when we have these very high discounts, that implies bearish activity, bearish sentiment. And typically bearish sentiment leads to a bullish move. The only issue I have here with gold is we have a PMO sell signal. So despite having all of these bearish readings, I'm not looking for much movement out of gold. I'd like to see it bottom above the zero line, but not so sure. All right, so that pretty much completes the sentiment update. So let's kind of get this all in conclusion here. So rising neutral territory, neutral for the put-call ratio, neutral as far as AAII. Name, I would say highly bearish sentiment, which is bullish for the market, but we may see a little bit of a lag there. RIDEX ratio, you've got I felt like it was really somewhat bullish to neutral based on the ratio more so than the asset movement. VIX is decreasing the volatility of those Bollinger Bands, but sitting on its average. And then gold sentiment discounts are much higher than average, but the PMO is starting to decline, and while it is decelerating and trying to move to the upside, I would say, okay, this is somewhat bullish for gold, but ultimately I don't think the gold charts look pretty good. So neutral, somewhat bullish, very bullish, bullish. So you add it all up, and I would say, honestly, sentiment is pointing toward bullishness for the market right now. And that's it, Tom. I've concluded my decision point sentiment report. Hopefully everybody enjoyed that.
All right.
Time to say goodbye. After, yes, we do need to know what everybody thinks, and I need to know what you think.
Wow. I really think this afternoon is going to be huge for the market in terms of which way we go. I mean, I think I was bearish at the end of last week, and I'm kind of on the fence right now. I want to see how we close. I think if we can rally into the close and get up close to that 2760 level on the S&P, I think that would be very bullish for the market. If we fail and go back below the 20-hour at the close today, I think that's bearish. So I think we're at a pivotal area right here. What do you think?
Oh, I absolutely agree. Since we have the holiday next week, I'm going to be going in mostly unchanged. I don't think a whole lot of major movement will happen necessarily next week just because of the holiday. But that's, you probably know better as far as historical tendencies regarding that.
Yeah, I mean, because I'm on the fence, I'm going to follow the historical tendencies and say that we move higher. So I'm going to go with higher for next week.
All right.
All right, there's our upcoming schedule. I do want to thank everybody for being with us today. Special thank you to Mary Ellen McGonagle for joining us again for What's Hot, What's Not. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.